welcome. You're watching Business Plus. The Go First saga has opened a Pandora's box for the Indian aviation sector. Days after Go First was first granted bankruptcy protection, preventing lessors from repossessing the aircraft, a global aviation leasing watchdog has put India on a watch list with a negative outlook. Aviation Working Group, also called AWG as an acronym, says that Indian aviation player has failed to comply with international aircraft repossession norms. Remember, on 10th of May, the NCLT admitted Go First's plea for involuntary or rather voluntary insolvency, blaming engine maker Pratt & Whitney for faulty engines and its financial troubles. NCLT granted Go First protection under a moratorium period for preventing lessors and lenders from recovering from Go First for a period of up until the moratorium ends. Remember, lessors then approached the National Company Law Appellate Tribunal, NCLT, and the ruling is expected today. On the show, what is AWG and its issues with NCLT order? Why are lessors miffed with Go First? And what do these developments mean for flyers in India in general? Joining me at this point in time in the studio is my colleague Soumalya Santikari. Also joining us is Ravi Kini, who is the managing partner at law firm MV Kini. I want to come to you first, Soumalya. A lot is happening in the aviation space, primarily on the back of Go First saga. Let's start from the very beginning. What exactly is happening at Go First and why are lessors miffed?
Lessors are miffed because, Shweta, as we see, Go First is now kind of facing bankruptcy proceedings, and the ball has now shifted into a court where both the parties are mudslinging, have indulged in mudslinging, and the Go First has blamed it squarely on the engine makers and the manufacturers, while AWG, which is a body of lessors and plane manufacturers, they are saying that it's India, I mean the NCLT ruling, it is going against the international norms that are in place, and which is a Cape Town Convention, which is a global treaty aimed at increasing financing and leasing of aircraft makers. And India obviously is a signatory to that convention, but it has not been ratified by the parliament, which means the country's NCLT laws, they will have primacy over whatever concerns are there, and they'll take the required decisions to move ahead with the process.
Okay, so it looks like it's going to be a long drawn process at this point in time, with AWG coming into foray.
Right, absolutely. I mean, this is that narrative is now shifting to India versus the rest of the world in that case, and it's going to be a bit of a blow to the image of India's aviation hub aspirations, because at one time when you're saying the sector is primed for growth, these incidents, they somehow put you in a position where the lessors, and in this case in the aviation industry, they are a very important component because they finance your plane purchases, and they are an important cog in the wheel. So the sooner this gets resolved, the better for the entire aviation sector.
Okay, let's get to the crux of the problem, and I want to come to you at this point in time, Mr. Kini. The lessors are saying that we were hoping to repossess our aircrafts as soon as Go First ceased operations, before it went to NCLT, before it declared insolvency, at a point where they were unable to get payments for what was agreed upon, and the fact that lessors had to then approach NCLT because the NCLT order does not allow them to repossess aircraft is a blow for them and for the entire lessor industry at large, which where there's a lot of faith involved beside what is legal and on the paper. Lessors are now currently, and 3 of them are currently in NCLT challenging the NCLT order. We don't know what's going to come in from there. But as far as AWG and AWG's comments on India is concerned, that we do not have enough faith, and this is sort of jolted our faith in the Indian aviation space. How do you read these developments?
I think AWG is absolutely right, because what is happening here is that I'm assuming that these are operational leases. These are not finance leases. So if these are operational leases, then the asset belongs to the lessor. And NCLT, even if you go by the moratorium, what is prescribed, there is no automatic moratorium for assets which are not of the company. So therefore the concern that NCLT has gone beyond what it is required to do, and assets which belong to, and there is a international obligation which is by way of Cape Town Convention that India has ratified, and so therefore so there is clearly, a problem here, and if we do not get our act right, after Kingfisher, the same fiasco did happen in Kingfisher. And after that, I think Indian lessees found it very difficult to get aircraft leased, and so therefore this is a problem, and I think we should get it sorted at the earliest. I don't think there is a case for holding somebody else's asset, especially when that asset is brought into the country in terms of a particular treaty, the Cape Town Convention. So once
but correct me legally if I'm wrong, and I think legally India's indigenous laws, and in this case insolvency laws, take precedence over and above what we signed as a part of Cape Town Convention. And in which case here NCLT has firmly said if a certain organization is under moratorium, then essentially their assets need to be protected so as to protect them from going bankrupt.
That is where the question is whether it is their assets. It is not their asset.
Okay.
That is the crux of it. The asset is not of Go. The asset is of the lessor. So it is not, if it's a finance lease, I can understand the asset would be in their books. But if it is not their asset, then how do you prevent them from taking their asset, which is brought as per a treaty? So there is a treaty. They are giving their asset, relying upon that treaty. They are believing that India signs a treaty, they will honor it. Now, if you don't, now then there is a problem, because NCLT, whatever when we talk about NCLT orders, moratoriums, they talk about the assets of that company. You cannot, but if it is somebody else's asset,
and not of assets in possession of the company. I understand there is a difference there. Assets that belong to a company, but assets that are currently in possession of the company.
But then the assets which are in the possession of the company, there is an IDERA which is signed as per the Cape Town Convention, given to DGCA, which is very, very clearly states that in case there is a default, that they can take the aircraft without the lessee's permission. So when there is a treaty which is signed, which is ratified by India, there is a IDERA which is filed before the DGCA. There is no provision, according to me, wherein if there is a case, if there is an arbitration, all that moratorium happens. But if there is an asset which is not yours, which is brought into the country by way of a particular agreement, right? And then you do not honor that agreement, that I think is a little bit of an issue.
Okay. Okay, important points raised there by Mr. Kini, and I want to bring you in, Soumalya, at this point in time. The statements that have come from Aviation Working Group are a dampener because it questions the faith that lessors have in the Indian aviation sector as a whole in various airlines. What sort of large-term impact are we looking at?
Yes, you're right. And as Ravi pointed out, after the Kingfisher fiasco and the Jet, obviously Jet is still in the bankruptcy courts proceedings, and this is going to be a body blow for a sector which is looking to get fresh wings and fresh impetus after undergoing after debilitating impact from the COVID pandemic, and these incidents are going to have an impact on the various bankruptcy or the various recovery model processes that we are seeing or witnessing in courts right now. Anyway, we all know that the sector is known for turning cash piles into loss-making concerns. So if the country or the regulators behave in a way where the lessors, which are a global body, and it's an interconnected world in a sector like aviation, you cannot really throw them to the dogs. So in this case, they have to tread carefully, and that is why there are reports coming in that the Indian Parliament will soon pass the law so that to assuage the concerns of the lessors who are rightfully concerned about their business operations in the country.
Okay, I understood that, but the Vardio Group, and even after AWG's statement has now come on record, and in fact before that also came on record, squarely blaming Pratt & Whitney, and I want to bring you in, Mr. Kini, here. They said that they were profitable, they held about 7.8% of the market share, they were minting money, they had enough passengers, inflow of passengers, incoming of flyers. So what happened therefore happened in a period of approximately 4 to 6 weeks. right before they declared insolvency, did not have enough operational money. In which case, how do you then blame them for not, for perhaps not realizing that such a problem may arise? Obviously, the right course of action for a company that does not have enough operational money is to knock on the doors of NCLT, which is what they did.
No, look, if there is a contract between parties, right, and if you are not paying as per the contract, there are rights and remedies available to that party. One of the remedies available to the lessor is to repossess, right? Now, if you say I will use other means to stop repossession, according to me, this is not fair in any context, because first of all, it is misusing the NCLT process, according to me.
Can I at this point in time, I want to understand, are you saying that the NCLT, or you do not agree with the NCLT ruling?
Yes.
Okay, please go ahead.
Yes. So what I believe is that, one, the NCLT also has to see it in the light of, first, that it is not their asset. So there is no obligation to protect, the asset of the company. This asset, the obligation on the NCLT is to protect the assets of the company. This is not the asset of the company. The second point is, if, let us say, they have to also, it's not just a domestic issue here. It is the asset is an asset which is brought into the country because of a treaty, which is India's international obligation.
But sir, let me also take you back to before India became a signatory of the Cape Town Convention, and right before that, every time an Indian airline was, finding itself in tight waters, the lessors would take back the aircraft, further dwindling away, and just taking away any sort of options that the airline may have to revive itself. And if that were to be the case here, Go First would have gone under long back.
But that is exactly the thing. How can, it is a decision of the lessor. It is their money, it is their risk, it is their call. I cannot say that I am not paying you the lease rentals and I will still want to hold the aircraft. Now that by any standard will not work, and that by rule of law it should not work, right? So I don't think that we can say that now might is right. I have the aircraft, so I will not let it go. I will not pay you rent. I am defaulting on that. There is no doubt that they are defaulting on the rent payments.
And so what protection do airlines have at a point where they're not making money, or they don't have enough money in their kitty to run their operations, and lessors repossess the aircraft? They are literally left with no, absolutely no jet to take to skies, and that is the end of them.
No, see, it is again.
What protection? I want to understand legally, sir. What protection do airlines have?
No, you can't say that a bank, can you say tomorrow that I will not pay my housing loan and they cannot repossess my house?
No, but I can definitely ask my landowner to give me some time, which is what has happened in this case.
But that is exactly that. You are assuming that they have not given. The question is, there are a lot of now during COVID, and there are other airlines, right, in the market. During COVID, do you think they
I'll give you COVID's example. If I were not to be able to pay my rent during COVID, I would try and negotiate with my landowner and ask for some time, which is what moratorium does. It gives time to an airline player to recover money, get its operations back in order, and then pay the lessors.
Did court give you that relief, or your landlord gave you that relief? That is the question.
In this case, the court gave the relief.
No, in your case, it is the landlord who gave the relief.
That is correct. In this case, the court gave the relief.
It is the obligation. It is up to the landlord. It is up to the lessor to give you that credit. And they have. If you go and see other airlines, right? There are many airlines in the market. Most of them have defaulted during COVID. Most of them, the lessors have worked with them. And in many cases, aviation is not a very simple business. It's always there. There are ups and downs, and the lessors do work with. They also understand that if they repossess, it's not easy for them to deploy the aircrafts somewhere else. They are multi-million-dollar assets, right? They will if they can't do this, if they cannot deploy, they are still in losses. And getting money from NCLT for operational creditors is zero chance. If Go Air goes down, the lease rental defaults which the lessors will have to face, and there is no way they are going to get it. That's for sure. So they had to work. Instead of going and declaring, they should have tried to negotiate with the lessors and try to come at a middle ground. I think that, and most lessors, that at least with my experience that I have, I always am on the other side of the lessors. They do negotiate. They do sit with you, and they are reasonable. So if they have faith in the airline,
the expectation of reasonability is also very. It's with you, sir. It lies with you. It's not imposed to everyone and anyone out there. So your expectation of reasonability, and we don't have a representation from Go First at this point in time, but I assume they were also expecting Pratt & Whitney to be reasonable, but that did not really happen. So it's very subjective. The expectation of reasonability is very subjective. In this case, you may expect the lessors to be reasonable, but in the past, they haven't been reasonable. And as I mentioned, I'm going to take you back to 2008 before signing off the Cape Town Convention. Every time an airline reported problems with its books, every time they suspected that an airline will not be able to pay back, they took the possession of aircrafts back, leaving airlines high and dry. In this case, if this were to happen with Go First, it would have already gone under.
But that is their legal right. They have that billions and billions of dollars they invest in the asset. So that's their legal right. So if tomorrow you start investing in a house, and then the lessee decides, I will not go for whatever reason, maybe he's out of a job, maybe whatever reason, that doesn't work.
Okay. I want to bring in Shawalo at this point in time. Shawalo, we were discussing AWG's downgrading of India. Currently, they've scored us 3.5. They are going to score us a 3 because of the recent instances with Go First and how that sort of has affected the trust that lessors have in the Indian aviation players in general, and that will have a long-term repercussion. And we were discussing the long-term repercussion on the airlines. What about repercussions on flyers? What can they expect? Because at the end of the day, I think beyond corporate sufferings and corporates making money, not making money, it's the people who continue to suffer.
Yeah, absolutely. And on Shweta, unfortunately, it's going to be a bummer for flyers because it will result in higher yields for the airlines, and they'll have to pay a higher amount on the rentals, because if the lessors obviously they realize that it's a scenario where they're not going to recover the cost in the long run, then they'll have to increase the rates, and obviously it is going to translate into higher ticket prices for the flyers at the end of the day. And in a way they are one of the most important stakeholders in any industry, but unfortunately the way the past decade has been for the sector in general, they have had to bear the brunt, and with last moment cancellations and airlines going under, resulting in skyrocketing fares. So in this situation also, I'm afraid that...
Do you think this is going to have an impact on the airfares? If yes, how?
Not immediately, but yeah, in the long run there might be a case where the fares may increase because the airline operators will have to pay more.
Okay, airline operators will have to pay more, and they may pass that cost to the flyers. At this point in time, flyers are already struggling in absence of many choices.
Yes, the lesser the number of airlines operating in the country, the lesser choices they have, and obviously the fares will also be higher in that scenario.
Fares will also be higher, and that will have a long-term impact on not just players here in the aviation sector, but also flyers in general. With that, I think we're going to end this discussion. Mr. Kini, Soumalya, thanks very much for joining with your inputs on that story. We're going to move on now. There is an increased uptick in 5G smartphones, especially in Tier 2 markets. Now, such is the love of 5G smartphones that e-commerce giant Amazon's sales in the first quarter of the year were primarily driven by it. Now, according to media reports, strong demand from Tier 2 market for 5G smartphones is boosting smartphone sales to a double-digit growth for Amazon India. The double-digit growth came in during the first 3 months of the year, which is the first quarter of 2023, according to various reports. Now, while Amazon has posted impressive growth, the company continued to trail behind rival Flipkart in terms of accepting shipments from brands during the same quarter. While the online channels accounted for 44% of the shipment in first quarter, a majority was taken by Walmart-owned Flipkart, according to a Counterpoint research. On the show today, what's driving India's 5G obsession? What does the growth in rural market means for e-commerce players? And who's winning the battle in smartphone market? Joining me at this point in time is Lloyd Mathias, who's a brand expert. Also with me in the studio is Kartik. Kartik, thanks for joining us.
Thank you so much.
It looks like there is a constant battle that has been playing out in the smartphone market, but the battle at this stage is in rural India as opposed to urban India, what we would
Actually,
expect.
even in urban India, because I think as you started reading, Soumalya got so excited that he really chucked his phone down, and that's the little noise interruption that we saw. So I think he wants to upgrade to a 5G phone as well. But yeah, interesting times, Shweta, and it sort of reminds me to this largely infamous Veer Das stand-up comedy in New York, if I'm not mistaken, where he quite discreetly said that I live in two Indias. And I think that seems to be the case here as well. We live in two Indias. There is one India where you have the likes of Tim Cook coming over, inaugurating these huge Apple stores in prime locations in Mumbai and Delhi, and selling phones upwards of 1 lakh rupees and well beyond that. At the same time, you have this great demand of 5G phones coming not from these urban centers, but from Tier 2 cities. At the same time, there's another angle to the story. Again, I live in two Indias. There's one India where there is a CAIT, Confederation of All India Traders, up in arms always against big tech and large e-commerce giants, saying that it's going to sort of, undo the large market of retail stores and kirana stores, and in general, the mom and pop stores run in Tier 2, Tier 3 cities. At the same time, you have demand for these very smartphones, which are high value purchases, which are fairly involved buying behavior, actually coming from these Tier 2 cities, and the shopping not really happening as much offline as one would expect traditionally, but happening online.
Okay.
So interesting sort of contrasts we get to see in society.
Absolutely. Various different pictures emerging from rural India, urban India. I want to bring in Lloyd at this point in time. Lloyd, just before this discussion, in fact, this morning, we were discussing as to the kind of hullabaloo we saw around Apple's India stores launch, and one view was that it is going to lead to a spur in iPhone makers' sales in India. But from what we are looking at right now, it appears that whether a physical store or an absence of physical store, Indians are already buying smartphones. What sort of value do the physical stores then have? That's my question number one. And question number two is, what do you make of the fact that rural India perhaps is consuming more data, buying more smartphones, and going big for 5G as opposed to, not so much as urban India?
Thanks for having me on your show, Shweta, and it's great to be here. To answer the two questions, I think in any purchase, specifically in the category of mobile phones and smartphones, I think there's a complementary between the offline presence and online. I know there are brands that have chosen to try to go online only and have met with some success. But I think long-term consumers still like the look and feel of walking into a store, asking questions to a real-world agent or shop salesman, just the feeling that something is there. So I think brands that have a long-term strategy in India recognize the importance of having physical stores, and obviously a few flagship stores where they can showcase their entire or experience stores, as they call it. Right. So clearly, I think what Tim Cook did last month, launching a couple of stores, was really establish that very clearly and establish Apple's commitment to India as a significant market. I think that process is done. The second part, I think, really is tied into India's growth in telecom. And clearly we all seen the big point of inflection was 2016 when Jio came in and made voice free. But more importantly, drove data to the extent that India still remains today only the international market with the lowest cost of data. And what that has done is really driven the use of data. So today, Indians are the biggest guzzlers of data in the world. And on the back of it, we've seen a whole rise of the internet economy. The fact that about 750 million Indians today are technically on the internet, and at least more than 60% of them are transacting in some form or the other. So I think this growth was inevitable from 2016. I think what we're seeing in the last couple of years, albeit briefly interrupted by the pandemic in 2020 and 21, is the growth has been powered by the tier 2 markets. As e-commerce is reaching down thanks to a lot of logistics and third-party delivery providers to smaller towns, I think a lot of the growth is being driven from there. And what the pandemic did was really demonstrate that a whole lot of services, starting with education, healthcare, government services, can actually be delivered through the phone. So I think a combination of this has really kind of exploded the market. And what we are seeing right now is a lot of growth coming out of tier 2 markets. One additional factor is what the government calls the CSCs, the common service centers, where a lot of government services, so even people who don't really have great connectivity the last mile can actually go to the common service center with their smartphones and devices and actually get a whole lot of things done, right from booking an IRCTC ticket, to getting very basic documentation like birth certificates and such.
Okay. Do you know something interesting you mentioned, and Kartik, going back to your analogy of two Indias, I think you mentioned multiple Indias.
That's his original analogy, but
I'll give you credit for it. I'll give you the credit for it. I think focusing particularly on rural India, the trend that we are seeing as per data and figures that we have is that the growth for e-commerce players, largely Flipkart, Amazon, the two big e-commerce players, is coming on the back of smartphone sales from rural India.
Tier 2.
Tier 2. Yeah. Tier 2 cities, smaller cities, as opposed to large urban metro cities. This largely also talks about the consumption that we are seeing in these areas. And also, I want you to briefly touch upon the fact that we keep discussing rural demand, we keep discussing demand in tier 2, tier 3 cities as perhaps an indicator of how rural economy is doing in general. And from what this data suggests is perhaps that economy is doing better when it comes to consumption of data, consumption of electronics, if this is the indicator that we draw our inference from.
Sure. So actually there are a couple of indicators. I don't think mobile purchases is a formal indicator yet.
But what it tells
you is that data usage is definitely on a rise. What it also goes to show is that, owning a device today, a smart device, is actually a necessity.
Okay.
And you're consuming a lot of entertainment, information, knowledge, communications, everything is actually happening through that device. What is also interesting to note here is that the lion's share for tier 2 cities is actually in mobile phones which are more expensive than 15,000 rupees.
Okay.
So higher price value than 15,000. Up until now, the common understanding was that 15,000 and above is more of an urban phenomena, whereas anything below 15,000 is rural, and maybe you could extrapolate that to tier 3, tier 2 cities as well. But that doesn't seem to be the case anymore. So 15,000 and above is a fairly significant price point for an individual in a tier 2 city to invest in a mobile phone which is 5G ready. Right, and the kind of influence is going to shape for his existence or her existence and her life is significant. And with 5G, of course, the whole more speed, better streaming quality, all of that sort of enhances the quality of life of a person. What we also understand is that the longevity of a device like a cell phone is much longer in a tier 2, tier 3 city than it is in urban. So the frequent changes that we guys presumably often make to our devices is not something we see there.
Okay.
So for somebody who's buying a 15,000 rupee phone, and there are some data points that also indicate even 30,000 and higher phones are seeing a larger uptake in rural cities and tier 2 cities, it sort of goes on to show that people are going to hold on perhaps to these devices for long.
Okay.
And there is one more interesting trend that I picked up in the counterpoint research that you refer to. So what is happening is that deep discounting is something which is fairly prevalent in e-commerce, right? And that is why CAIT is always up in arms against these very large e-commerce players. Now what happens is sometimes you go to a mobile store, a physical brick and mortar mobile store, and you look at all the various models available. You have a price budget, let's say 15,000 to 18,000 is the range. You look at all available brands, all available options, camera quality, 5G compatibility, battery life, this, that. You look at all the parameters and you hone on to the device that you really want to buy. And then immediately from your existing device, you go to one of these Flipkart or Amazon players and you see the price difference. Now the guy in the shop is quoting 18,000 rupees, you get it for 17,500, you place your order there.
Absolutely. And this is an interesting point, and I want to bring Lloyd in as well. Lloyd, you know, I think, and we were discussing this, as I mentioned, the need for a physical retail store. Kartik made a very interesting analogy. He said that you go to a retail physical store to look at the device, to feel the device, to see if it's compatible with you and to see if it meets your need, but you're actually then going online and buying it from the e-commerce,
if you get a price advantage
whatever the e-commerce portal is, because you're expected to get a price advantage. Right. Which brings us to the competitive pricing. Also, as you know, many brick and mortar businesses would say, a predatory pricing, because it hurts their businesses. Do you think that also applies to big metro towns? Is there some data to suggest that? And more importantly, what is then viability of the mom and pop shops in small, in small relatively tier 2, tier 3 cities, and big retail physical stores in Delhi, in Mumbai?
Yeah, I think that was a great point Kartik brought out. I think the reality is that consumers across the spectrum live in what we call an omni-channel world. We're constantly toggling between the real world and our digital worlds. And it's perfectly normal for every subscriber, right? From a value-conscious subscriber to someone buying something very expensive, you always quickly go and check. I want to make 2 points. I think one is the fact that brick and mortar adds a certain sense of stability. I think that is proven beyond a point. The second, which is really backing this increased demand in tier 2 markets, is that a lot of the groundwork in the last few years have been done not just by the big 2 majors, Amazon and Flipkart, but a whole series of smaller local apps in the e-commerce space actually got consumers starting to get involved with e-commerce with much smaller, low-value transactions. So ranging from local apps to even the likes of the Meeshos and the Snapdeals actually deal with a whole range of unbranded products predominantly. They also sell the big name tickets, but a lot of their ticket sizes tend to be much smaller, and therefore they are actually getting people onto the e-commerce bandwagon, from where people are now getting familiar, saying that, hey, it's time to buy a slightly more expensive. And that's the typical curve that people go through in e-commerce. Initially, you buy relatively cheap, low-risk items, and once you're confident, people start climbing up the value curve. It's the fact that in cities today, people buy a lot of televisions, refrigerators, air conditioners out of e-commerce. So I think that climbing process is what we see as one significant driver. The second, like I said before, and I think is important to reiterate, is the fact that as a range of services, entertainment options starts moving through the 5G pipe, people find much more significant uses for their phone. The phone no longer, say about a decade back, was an indulgence for someone in a small town whose economic sustenance was not so great. I think today they do a lot more, right? It's a tool of work. It's a thing that entertain themselves. It's sometimes used in some form of education. It's a place where they can book tickets, can do a whole lot of things. So I think the basket of things that one can do out of e-commerce has widened significantly. I think that's another thing that's carrying this increased growth in tier 2 markets.
Lloyd, I just want to touch upon another interesting, term that I stumbled upon in the Counterpoint research, and there's something called live e-commerce. And from what I understand, it's stated that live e-commerce is when this influencer takes on to social media for a duration of 15 to 20 minutes and announces this flash sale and gives out these discount coupons to immediately prop up the sale of a certain device or so. How significant is this phenomenon, and where else are we seeing this sort of, get the sort of coverage apart from mobile devices in e-commerce?
Thanks for bringing out that point, Kartik. I think absolutely bang on. I think live commerce or social commerce is a trend that's growing. And very strangely, it's growing on 2 ends of the spectrum. One is obviously are these ultra cutting edge urban influencers who possibly once a week, let's say a well-known personality comes and says, today I'm going to showcase the latest in watches or the latest in fashion trends. And it's like a live ticker at the bottom where people can do spot buying. It's the equivalent of the early kind of catalog shopping on television that used to happen, right? When you had those people selling the standard, build your muscle kind of equipment that kind of went, round the clock on television when you switched on. Other end of the spectrum, this is also picking up, I'm told, very significantly in smaller markets. So the spread of short format video, which has become a huge entertainment tool. The TikTok-alike kind of shows where people are watching those 30, 40, 60-seconders made by local people, each of with a significant following, have now begun to incorporate e-commerce. So brands are tapping these small local influencers who are now showcasing interesting new devices, interesting new things, which you can order with one click straight from your phone. So it's like a seamless transaction where this influencer will talk about this new, and let's say, makeup device or a new cosmetic, and with one click in a day or two, you actually get that product. So there is a bit of social commerce that may also be driving this. I know for a fact that it's a big trend in the cities. I have a feeling it might be one of the key drivers in semi-urban and rural India as well.
Okay. Interesting point there. Live e-commerce, very, very interesting. And concept of flash sales, and perhaps not as Lloyd pointed out, not restricted to one or two such platforms. Large number of new players are getting increasingly involved in flash sales, Kartik, wherein I don't know if you've bought one from a flash sale. I have. People I know I have. They have bought actively from flash sales, getting deep discounting on an item that would otherwise cost them not double, but at least a little bit more, 10%, 5% more in price value. Interesting techniques there that e-commerce players come up with in order to sort of retain their customer base and increase their customer base. And we continue to, of course, talk about the growth of e-commerce players here vis-a-vis the smartphone market. We will track that story and more. Lloyd, Kartik, thanks very much for joining with your inputs on that very important story.
Absolutely.
Shifting focus, the Defence Ministry has approved yet another list that progressively bans the import of 928 subsystems, components, spares and line replacement units of military equipments and platforms by defence PSUs to promote self-reliance. Now, in continuation of the first three such lists, which contained a total of 1,238 items announced in December of 21, March of 22, and then subsequently in August of 2022, the new, and I quote, positive indigestions list for the defence public sector units list 928 items in the fourth list. Defence PSUs are expected to undertake the indigenization, if I'm pronouncing that correct, of 928 listed items through different routes under Make in India category and in-house development. On the show today, what does the ban on import means? What is the new list? Why is the new list significant? And how the Make in India push for defence sector is panning out? Joining me at this point in time is retired Major General AK Channan. Sir, thanks very much for taking time out. I want to first begin by asking you, of the 928 items that are now stand to be banned in a gradual phased out manner, what are the big heads under these 928 sub list or sub items that we can see being banned by India in coming few days or months? I'm sorry, I can't hear you at this point in time, sir.
Okay. So thank you very much for inviting me on your show, and this is a very relevant topic as far as this indigenization list in a progressive manner that they have been issuing out since 2020, August of 2020, yes. So what is basically happening is that when we wanted to move away and actually start doing the Make in India. Actually, Make in India is also two phases. In the first phase, that is in between 2014 and 2019, the emphasis was on Make in India, which was, a very smaller subset, which was looking at manufacturing in India and trying to create some small technology value chains here and there. After 2019, the focus shifted and it moved on to Atmanirbhar Bharat. So that's a bigger and a broader kind of a context of Make in India, in which we start building our own technologies, we start developing our own IPRs, we start having a testing, evaluation, certification regime, and of course the manufacture, etc. happens. So firstly, this is a much bigger thing that is happening. Now, when you start actually making a complete end-to-end shift, that is the time that you will need to provide the right kind of incentives to the industry to make sustainable business models for them at the small, medium, and the larger levels. So the first step in this was to make certain lists of items that we will not import anymore. So those become preferential access of the Indian industry to the consumer. So in the first list came out in August 2020, then subsequently a year later. All these lists have been very well thought out. All these lists are not immediate. They give a certain time frame for the existing contracts to kind of taper off, and also give the time for the Indian industry to understand and start kind of building their own technologies, or start creating alliances in a manner that they are able to, in the next 1 year 2 years, able to fully take on and cut out the imports. So that is broadly how these lists have panned out.
All right. Do you know of the 450 items in the fourth list? And I want to just break it down for the benefit of our viewers at this point. There are different kinds of components, as you mentioned. Magazine firefighting systems, 260 are related to gas turbine generators, 147 to shafting. The list also includes several items that is connected to HTT 40 trainer aircrafts, including main nose wheeler tires and multifunction systems. It is an extended list, sir, of the earlier 1,238 items which were banned. I want to understand how many of them have been indigenized at this point in time, and what is remaining from the previous list before we come to the next list.
Okay, each list had its own trajectory, each list had its own timelines. So by and large, these whatever timelines we've gone through, by and large, we've been able to actually indigenize things well before the laid down timeline. The Indian industry has actually risen up to the challenge and moved actually ahead of the various timelines. Obviously, that doesn't mean all of those 1,098 items have been indigenized. There are some which are not getting, which actually have not, the numbers, etc., are so small, or the population in the system is so small that it is really not becoming a very fit business case to do it. Otherwise, as far as technology, as far as the capability of Indian industry is concerned, as far as the policy is concerned, and as far as the right incentives are concerned, everything is fully in place, and all the lists actually, as per intent, have moved ahead of schedule.
Okay, but from what the data that I have, sir, and this is the official data that has been provided, out of the 1,238, only 310 have been indigenized. Are you saying that we are on track?
Yes, because as far as the timelines that have been given for indigenization, whatever have been the laid down timelines, things are actually happening as per the timelines, and we are well within the timelines. As I said, there are a few such items where it is probably, indigenization just doesn't happen because of the spirit of getting indigenized. It has to make business sense to actually bring. If the numbers are small, if the population on the other side is very small, and the effort of trying to build your own capabilities far beyond, it doesn't make a good business sense, then obviously those things will probably the business will not take them forward.
All
But
right.
by and large, these are well thought out lists, and I wanted to reiterate this, that whatever has been the impetus that it has given, things are happening well ahead of time.
Okay, things are happening well
Yeah.
ahead of time. What's the timeline that we're talking about for the current list, sir? And I also briefly want to talk about how the defense PSUs are faring at this point in time. This is the fourth list that we are seeing. What is our in-house capability like? And you said that we are doing better and we're moving in the right direction. Of course, there's a timeline that we're adhering to. If you could briefly touch upon what our capabilities are as opposed to, compared to last 5 years, how much we've done better or worse, could briefly give us some sort of sense there.
Okay, so as far as the current list is concerned, this is largely actually, this is fully a list that has been released by the DPSUs, and in this particular list, bulk of the items are from the MDL. I think more than 900 items are line items from the MDL. The timelines for this list have already, we are in, May of 2023. The timelines for indigenization will be laid down as December of 2027. So you can see how much of a lead time they give for the industry to kind of understand, for the academia to get involved and build, those kind of critical technology gaps, or those little technology blocks which are required to take this forward.
Okay.
Uh, so that is how this particular list has been panned out, barring just a few items which we need immediately. So the timeline is, I think, that just be about 5 or 10 items which are at 2024. Rest of it is all panned out well across to December 2027.
All right, Major General AK Channan, thanks very much, sir, for your time and for your inputs on that story. We will keep tracking that story and its details as and when they emerge. But we're going to shift focus for now. Bank Nifty surged 0.64% to touch an all-time high of 44,151.70 today. Joining me at this point in time is Suyash. Suyash, what has led to this rally?
So Shweta, Nifty did surge to an all-time high, and what's more impressive is that it was able to close above the 44,000 levels. Okay. So the recent run-up, so Nifty Bank has been on a 4-day rally, and the recent run-up has been on account of a strong Q4 showing by the majority of the constituents, including HDFC Bank, ICICI Bank, Kotak Mahindra Bank, AU Small Finance Bank. Now all stocks ended today's session in the green. Bandhan Bank was a top gainer today with a rally of 3%. Bank of Baroda, IDFC First Bank also rallied over 2%. Now, on a year-to-date basis, Nifty Bank has outperformed the benchmark Nifty. So Nifty has given a return of about 1.11%, whereas Nifty Bank has rallied as much as 2.5%. What's more interesting is that the index has gained about 31% in the last 12 months. Okay. Now, over the last 2 months, most of the recovery in the Nifty banking index has been led by heavyweights like ICICI Bank and HDFC Bank. Individually, now these stocks have rallied 14% and 9% in a course of a month, right? So,
what's leading to the rally?
So it's the strong Q4 showing of majority of the banks this season, and it's because their asset quality is improving. In a high interest rate environment, the interest income is improving. So now in the the bank index has surged and it has been outperforming Nifty so far this year. So in light of that, the experts are expecting some sort of a profit booking to take place at this juncture. Okay. Although if the run-up continues, Nifty Bank, according to experts, Nifty Bank can surge up to 45,000 levels. Okay. But in the near term, we can expect some sort of a profit booking.
Some sort of profit booking there. And before I let you go, Suyash, when we often talk about banks, we are comparing them vis-a-vis how the global banking system is operating and with what's happening in the US. And this news comes at a time when the banking crisis, although I think it's stagnant, there is a status quo there, but one after the other, we have seen banks falling in the US. Seems like Indian banking system still relatively insulated and protected from
very well insulated.
The banking,
Yes. And the fact that the asset quality is improving, right? Okay. Their bottom line,
the faith on banks continue to be strong.
Exactly. At least that's what we saw in the Q4 results.
Okay. The faith in the Indian banking system there continues to be strong. We're going to move on now. Thanks, Suyash, for that information, but we're going to shift focus. The Securities and Exchange Board of India has denied allegations that it has been investigating Adani Group since 2016. The market regulator filed an affidavit today stating that these claims are, and I quote, factually baseless. The regulator also cautioned against jumping to premature and incorrect conclusions in the case. SEBI clarified that it had conducted investigations into the issuing of global depository receipts, that is GRDs, for 51 companies. However, none of the listed companies belong to Adani Group that were a part of the investigation. These statements were made in response to a petition challenging SEBI's probe into the Adani Group, which claimed that the investigation had been ongoing since 2016. Now, Supreme Court will now review SEBI's response and examine the facts as they are presented. On 2nd of March, the Supreme Court issued a directive to SEBI instructing them to investigate any violations that occurred both before and after the release of Hindenburg report on the Adani Group. The court gave the market regulator a 2-month timeline to complete this investigation. On 29th of April, 3 days before the initial 2-month deadline, SEBI requested a 6-month extension, remember, citing the involvement of cross-border jurisdiction that would require additional time for processing. Only 2 months were given. On Friday, Supreme Court indicated that it may grant a 3-month extension, implying that SEBI may receive additional time to complete its investigation into what followed as allegations after Hindenburg report. The Supreme Court's decision regarding the extension request will be crucial in determining the timeline and the course of investigation into the Adani Group. We will continue to closely monitor that case and provide updates as they unfold. And with that, it's a wrap on this edition of Business Plus. Keep watching News9.